What's happening, friends? Welcome back to Dynamo DeFi. My name is Patrick, and on this channel I talk about cryptocurrency, decentralized finance, and economics. So if you like those topics, be sure to like and subscribe. Today's video is another installment in my series about building a DeFi portfolio for passive income on different blockchains. I haven't done one of these in a while. However, I will include some of the older ones down in the description of this video. Today's video is going to be all about building a portfolio on Near protocol. Near has been getting a lot of attention recently. I did another video on it just last week, and I want to dive a bit deeper in and look at some of the pools and yield farming opportunities that are available on Near right now. Before I go any further, I want to emphasize that nothing I talk about in this video is suggesting that you do or do not buy a certain coin. This is just a compilation of some of my research, and hopefully it can help you do your own research as well. Awesome. Let's get into the video then. First thing that we need to look at is which categories are we going to categorize our portfolio into. And for people who have watched my other videos in this series, a lot of this is going to be review, but the way that I generally break down my portfolio is into 4 categories. First category is stable coins. These are going to be coins that are pegged usually to the dollar, sometimes to the euro, pound, or another national currency. And I always like to have some of those around just so that I can buy the dips when they come up, and so I have somewhere to take short-term profits. Now, I want to emphasize, because some people misunderstand this, if you've booked insane crypto profits over the past year, yes, you could still use these strategies. But some of these places that I'll look at putting them, might be riskier than you'd want to put your life-changing profits. Use them to change your life. But that's the stablecoin category. Next category is going to be the high conviction large cap coins. And large cap is somewhat subjective, but for me, usually it's anything in the top 100. I consider that to be relatively large cap, and these are going to be coins that you have high conviction in. If it dropped 10% tomorrow, dropped 20%, you're not going to be phased because you've done the research. And this is a coin that you're willing to hold for the long term. Next is going to be the high conviction small caps. Because these are smaller, they're going to be inherently risky. And a lot of coins in this category, some people would consider to be mid caps, just since I only have it bifurcated into 2 categories. However, these ones will generally offer better rewards, sometimes, but not always offer better yields. And they're smaller. So they might be less well known, and you'll have to do a bit more research, but you still ultimately want to develop your own conviction on these. And then the final category, which has 10% here, but really that's a maximum allocation, is going to be your Moonshot, Degen type investments. And these are things that are either ultra low cap or ultra high yield, and they have the potential, if they really take off, to transform your portfolio. But if they went to 0 or went down substantially, then you wouldn't be crushed because it's such a small percent of the portfolio. And those are the categories that I like to use personally. Everyone has their own preferences, and certainly everyone has their own percentages that they're going to adjust their portfolio for. Cool. So next, now that we've covered that, let's look a bit at the ecosystem on Near that we're going to be using for our yield farming portfolio today. First thing that's important to note is that there are really 2 chains that are included when you talk about Near. So there's Near itself, and this is from DeFi Llama, by the way. There's Near itself, and then there's also Aurora. So Near is sort of the native base layer chain. You use the Near wallet for it, and it's not quite as developed as Aurora right now, but it has been growing rapidly over the past few weeks, as you can see here. And actually, most of the pools that I'm going to select today will be natively on Near because I believe that the rewards and opportunity here are currently better. The other thing is Aurora, which is basically an EVM compatible network built on top of Near. It's deployed as a smart contract, and so it lets you build EVM applications on Near. And this ecosystem is more built out, and you would access this using your MetaMask like you would any other EVM compatible chain. And we'll look at some of the pools here. However, like I said before, I don't think the reward and I don't think the yields are generally as good as on Near itself right now. As far as the specific platforms that we're going to use, if you want to find small platforms on your own, you can use DeFi Llama here and investigate some of these smaller ones. But I'm going to use ref.finance on the Near network, and there's a lot of great pools in here. Then I'm also going to look at Metapool. Metapool is a liquid staking platform on Near. I'll look at Burrow.cash. This is a lending platform on Near. So money market, I generally don't use these as much because the yields aren't as good, but they might be appealing to some people. Then we're going to look at some things on Aurora. We have Trisolaris, which is the largest DEX on Aurora. We have Bastion, which is a money market on Aurora. And that is going to be it for our main DeFi projects. We have one other smaller Degen NFT staking project that we'll look at, but we'll get to that when we get to that. Cool. So now let's start finding some good yield farms. The first thing that we're going to want to find is a stablecoin portfolio. And by the way, quick aside, generally when I'm making a portfolio, it's not all going to be on one chain. In fact, it'll pretty much never be on one chain. In these videos, I just think it's helpful to show you sort of how you can navigate and build it on any of the chains that are out there. I'll probably do some more content soon on how I would build a portfolio diversifying across different chains and maybe across different sectors like metaverse, DeFi, etc. But for now, we're just going to do it on Near today since this is a pretty cool ecosystem. First thing we need to do is find some stable coins. And so let's look at some of these platforms we have available. The lending opportunities for stable coins are not too great, just a couple percentage points, but providing liquidity is quite a bit better. So if we go to ref.finance and go to the farm section, then we can filter to stablecoins. And I don't know what APR is. And honestly, even after I searched for it online, I could not figure it out. So we're just going to skip this one. But we can see that CUSD, USDC, so CUSD from Creditum, that's 35%. That's pretty good. Even the USDT, USDC DAI pool is 17%. That's not bad. And then these other ones are just one stable coin, so those don't apply in this case. But I'd be comfortable using this pool right here for 35%. Let's compare on Trisolaris just to see what's available here. So if we filter to USD, then we can see they have a USDC, USDT pool for 20%, and they have a USDO, USDT pool for, looks like, around 73%. And this one is tempting. It really is because it's so high. However, my risk tolerance is lower for stablecoins since those are funds that although I'm not totally de-risked, I've taken some of the risk off the table. And the AUSDO protocol is much smaller, something like a few $1 million in TVL. So I consider that to be riskier. So I'm actually going to stick with this pool, CUSD, USDC, on Ref Finance for 35%, and that is still an incredible rate on stablecoins. And so that is the first category in our portfolio. We're doing the CUSD, USDC pool on Ref for 35%, and that's great stablecoin rate. Next, we want to find some high conviction large caps. And if you're on the Near network, probably you're somewhat bullish on Near. If you're not, then perhaps you should find a new network. So we're definitely going to want to make sure we have some solid exposure to this coin. And we could do one or two pools here. Let's see what's available. So I'm going to sort by total staked here just to see some of the larger pools. There's Ref and Near. Ref is definitely a smaller cap, so I'm not going to do that for this category. You could just do BTC and ETH, 29%. I mean, that's about as good as you could ask for on those two. But I really want some Near exposure. One that's interesting is ETH and Wrapped Near here on Ref for 37%. Another one that's really interesting is ST Near and Wrapped Near. So what is this ST Near? Well, that is if you take your Near over to Metapool, you can liquid stake it and earn 11% APY. And then you can bring that over here and pair it with Near. And so you're earning 11% on half plus 10% on the entire thing. So it's probably going to be something around 16, 17% total. And that's pretty good for basically single-sided Near because there's no impermanent loss here. So that is tempting. However, we are looking to build a passive income portfolio. So I would prefer a higher rate than that. BTC Near 53% is all right. USDC Near 51% is also all right. It's pretty good. But you know what's really jumping out to me is this Celo Near pool right here. This has 143%. And Celo is another layer one. It's geared towards mobile applications, and it's been getting a lot of attention recently. So we're sort of in two growth coins, but still both large caps, both in the top 100. So we're going to go with this 143% pool. Just in the interest of being thorough, let's check out the money markets and try Solaris to make sure that we're not missing anything that's truly out of this world. If we go to Burrow, then we can see that we can earn 11% on Near. That's, again, not bad, but I think the stake Near paired with wrap Near is going to be better. On Bastion, you don't actually know the rate because you're pre-mining the BSTN coin. So could be incredible. You know, this rate could be out of this world. I don't know though, so I'm not going to go with it. If we go to try Solaris, let's see which pools are available with Near. Near ETH, not as good as on Ref. Luna Near, this is very interesting. So this is 40%, again, on two great coins. And then the stake Near wrap Near is 22%. So this is better than over here on Ref, and it's tempting to do a bit into this try Solaris pool just to get some single-sided exposure to Near. However, I think with the small caps and micro caps, we're still going to go with things in the Near ecosystem. So we'll have exposure to Near that way. So I'm actually comfortable going entirely into the Celo Near pool here. So 143%. We're going to plow 40% of this demo portfolio into this pool right here. And that's going to start earning us some very good yield. I mean, that is almost half a percentage point every day. And so going back to our main portfolio, we now have 70% of it allocated, 30% into that 35% CUSD, USDC stablecoin pool, 40% into the 143% APR Celo Near pool on Ref Finance. And then we need our small cap. So here we're getting into coins that are not micro caps. You know, they maybe have been around a little bit longer than some of these Moonshot plays. However, we're getting to things that have a bit more upside potential and also a bit more risk. So let's see what we have available here. And, you know, the Aurora coin is interesting, but I'm not really sure what the utility is. I haven't been able to find much on that. Meta is interesting. I mean, Metapool is a very, very strong project. If you look at what they're planning, it will be more than just a liquid staking protocol. So that's tempting. Let's see what else. Paris, I think, is a bit small. We'll look at that for the Moonshot one. It's got a nice APR though. And then, you know, the few that are jumping out to me on here are Oct. So Octopus Network is similar to Polkadot or Avalanche subnets, but is built on top of Near. So basically it allows projects to build their own application-specific chain on top of Near with the Octopus Network. And then Ref, of course, is the main token of Ref Finance. And you have to be very careful with DEX tokens because a lot of times they will perform better than the main coin in the ecosystem, like Near, if the Near ecosystem does well. But if Near ecosystem does not do well, then this is still getting inflated heavily. So it's going to really, really take a hit. So you do have to be careful. But I think that might be a good one to look at here. If we go over to Try Solaris, then we could say the same thing with Try. So we could do, for example, ST Near and Try and earn 87%, and that's in Try and Meta, and that is a very, very solid pool. I mean, I would be very, very pleased with this pool if I wanted to get exposure to the Try token. However, if we look over here on the TVL, yes, Aurora's higher, but it seems to me like the Near one is, you know, I like the shape of this curve much better than the shape of this curve, just to be honest. So I'm going to stick with getting exposure to Ref. And I also like Oct though. So I'm going to go into this Ref Oct pool for 37%. And now normally you'd want something that had a higher APR here, higher than the Celo Near pool we were in for the other one with 143% APR, but that doesn't seem like that's really going to be possible. So that's fine. You know, the upside potential in market cap growth is higher on these two anyways. So I'm totally fine with that. And so that's going to be our small cap allocation. And one thing that you'll note with these is I'm only choosing one for each of these. I could have chose 2 for the large cap. However, you really don't need that many different projects to have a diversified portfolio. Right now, we're getting exposure to 2 different coins in our large cap, 2 different coins in our small cap because they're paired on liquidity. And then we'll probably get 1 or 2 in our Degen. I would say, normally if I did this, I would do this on 2 different chains. So you'd have maybe 7, 8 different projects you're exposed to, but you don't really need more than that. After that, if one of them pumps, it's almost depressing because your portfolio doesn't go up that much. So just something to keep in mind. Now let's look for our Moonshot play. So one thing you could do is you could go over here to DeFi Llama and you could look through these small projects. And a lot of these are going to have market caps that are low millions. Some of them, like these ones in the hundreds of thousands of TVL, probably have market caps that are a few 100,000, could have tremendous upside potential. However, these are highly risky and it's not really responsible for me to suggest you invest in any of them on this channel since I have too many subscribers for that. So what I'm going to do is I'm going to focus on pools that are on ref in projects that are that are a bit more established. And so let's see what's available here. We'll sort by APR. And we can see, for example, there is, I don't know what UTO is. There's that ABR one I mentioned before. But one that I really liked the idea of, even though the APR isn't insane on here, is Paris. And that's because if you look into the Near ecosystem, NFTs have actually been growing at least as fast as DeFi, probably faster. There's a lot of Near NFTs, and Paris is an NFT marketplace on Near. So now you're getting some exposure both to DeFi and to NFTs. You're diversifying across different subsectors within crypto just with these liquidity pools. And one thing that you should always check if you look at these pools is you could say, well, what if I staked this? So if you go over to the Paris website, paris.id, then you can see that the staking rate is actually 240% APR on this, at least until the end of this month. So what I would do would be, for this portfolio, I'm going to try to accumulate some Paris since it seems to be the leading NFT marketplace, or certainly one of the leading NFT marketplaces on Near, and the Near NFT ecosystem is booming. So what I would do is I would get some Paris and I would stake that here for 240% APR to accumulate those tokens before the staking period ends at the end of April. And that would round out the portfolio. So as a quick recap of the whole thing, we have that pool for 35% APR with CUSD and USDC on ref for stablecoins. For high conviction large caps, we have the Cello Near pool on ref for 143% APR. For the high conviction small cap, we have that Oct ref pool. And I'm blanking on what the APR was on that. Let me check. The APR on that one was, where was it? Here it is, was 37%. And then for our final one, we have this pool over here on Paris, 240% single-sided staking on Paris. And that's going to round out our portfolio. And if you do a weighted average of that, that comes out to 99% APR. So if you put in $1,000, basically, this means that you'd be earning about $2.70 per day with this portfolio. And, that might not seem like very much depending on where you are in the world, I suppose. However, consider that every month, that's going to be $80. So around 8% on your portfolio for getting exposure to these investments that we already determined are probably decent investments anyways. And then you can take those $80, and some people like to auto compound. I like to take them and then put it in some other project that I'm bullish on. And that's my seed money for that project. And I don't need to worry about losing my principal because it was all rewards in the first place. So that is my portfolio on Near. Let me know in the comments what you think. Let me know if there's any other topics you'd like me to cover on this channel. And until next time, this is Dynamo DeFi.